Hi traders. Today, once again, I brought to you guys some recent examples of my day trading setups on GBP USD currency pair. These examples clearly illustrates how beautifully they work in the market and kind of lucrative opportunity they come and provide to multiply your investments. This setup do not require any kind of complex analysis and higher time frame bias. As day trader, we are more concerned about opportunities in hand and utilize them in our favor. As a day trader, it is most important for us to wait for correct opportunities and then utilize them. As trader, one must understand the value of patience in trading. One should have control on his urge to trade entirely based on intuitions and instincts. There are so many profitable setups possible in this market. Every trader has his different strategy or system which gives him returns over the time with proper money management. As per my experience, a trader should follow one or maximum two setups, which when works, gives them return more than his risk. In trading, even the setups with highest conviction could go wrong. A good mechanical system to trade is essential for every trader, and the setup I am talking about has logical explanation to work. Traders, if you look at the charts, one must analyze that every swing, high or low, is taken by the market at some time in future. These swings have liquidity reside on their top and bottom. Market moves from one liquidity area to another. Trend lines on charts, double or triple bottoms, double or triple tops, liquidity below or above any valid pullback, our horizontal support and resistance levels, previous day high and low, sessions high and low, etc. are major areas of liquidity. There are internal and external liquidities. Internal liquidity are between our external higher time frame range. Since we are not talking about any complex system here, our main motive is to understand why this strategy work, and one need to have only two time frames of 15 or 5 minutes to analyze it. Our strategy's main principle is sudden or abrupt change in price after taking liquidity from mentioned areas and showing rejection from area of demand or supply above or below areas of liquidity. These areas of liquidity are generally inducement created by market to trap early buyers or sellers. Institutions, unlike retailers, have to buy or sell large quantities to execute their orders. That's why they frequently create areas of liquidity where retailers could place buy or sell orders and then use them to fulfill their trades. Our stop loss are liquidity for the market. That's why it is highly possible that our stops would be taken out before market moves in its intended direction. So, without wasting much time, I am briefing about rules of strategy. Our first rule is setup should form in the initial hours of UK or New York market opening. I mostly consider my Asian range from 8 p.m. to 2 a.m. New York time. Hick and low of this range is important for us. Setup should form between 2 to 4 a.m. New York time and 9 a.m. to 11 a.m. New York time session. In our second step, market should hunt liquidity. Market should hunt liquidity forming bullish or bearish fair value gaps, and then prices should immediately reverses after taking liquidity with bullish or bearish fair value gaps. If a unmitigated order block is present above or below these areas of liquidity, it will add to our advantage. Market should reverse bullish or bearish FVG, which took liquidity with bullish or bearish FVG after taking liquidity. It shows the abrupt change in delivery of prices after taking liquidity and rejection from order block. Our third step is execution. One could directly place trade after formation of FVG or wait for the prices to return to order block which created FVG or inefficiency. Second entry technique is much better, but one could miss some trades if market would not return to order block. So traders, this is the strategy which I always look for to trade. I hope you guys understood it and the reason why it is high probability setup. I always try to bring the things which I have been doing and testing myself. Traders should not forget one core principle to trade. First backtest, then practice, and then implement.